In today's hyper-connected business landscape, the traditional castle and moat approach to cybersecurity is no longer sufficient. As enterprises migrate to the cloud and embrace remote work, the perimeter has dissolved. Enter Zscaler, a pioneer in cloud-native security that is redefining how global enterprises protect their data. Founded in 2007, Zscaler has grown into a leader in the zero-trust space, moving security away from physical appliances and into the cloud. For investors and decision-makers, understanding Zscaler means understanding the fundamental shift from hardware-centric firewalls to a software-defined security service edge. This transition isn't just about safety, it's about business agility, scalability, and the financial efficiency of moving from capital-heavy infrastructure to predictable, cloud-based operational models. Today, we dive deep into the mechanics of Zscaler and why it remains a critical player in the $72 billion addressable market for security services. At the heart of Zscaler's value proposition is the Zero Trust Exchange. Unlike a traditional VPN that gives users a key to the entire network, Zscaler operates on the principle of least privileged access. It acts as a sophisticated switchboard in the cloud, verifying the identity of the user, the health of the device, and the context of the request before establishing a direct connection to a specific application, never the network itself. This architecture eliminates the possibility of lateral movement, a common tactic used by cybercriminals to escalate attacks. For a CFO or a CTO, this means a significant reduction in the blast radius of potential breaches. Zscaler handles over 300 billion transactions daily, blocking billions of threats in real time across its massive global footprint of over 150 data centers. This scale provides a network effect, where a threat detected for one customer immediately protects all others across the platform. To understand Zscaler's financial trajectory, we must look at its position within the Gartner Magic Quadrant. For years, Zscaler has been positioned as a leader in Security Service Edge (SSE). This isn't just a badge of honor, it's a reflection of their competitive moat. While legacy firewall vendors like Palo Alto networks are racing to adapt their hardware roots to the cloud, Zscaler was born there. This cloud-native DNA allows them to scale more efficiently. The industry is currently consolidating around the SASE, or Secure Access Service Edge, framework, which combines networking and security. Zscaler dominates the security portion of this framework. For decision-makers, choosing Zscaler is often a strategic move to simplify the vendor stack, replacing disparate point products with a single, unified platform that provides consistent policy enforcement across every user and every location globally. From an investment perspective, Zscaler's financial metrics tell a story of aggressive growth and improving leverage. In recent fiscal years, the company has consistently delivered year-over-year revenue growth exceeding 30%. A key metric to watch is calculated billings, which serves as a leading indicator of future revenue. Zscaler has maintained strong billings growth, supported by high net retention rates, often above 125%, meaning existing customers are spending significantly more over time. While the company has historically prioritized growth over GAAP profitability, its non-GAAP operating margins and free cash flow generation have shown steady improvement. This transition towards Rule of 40 excellence, where the sum of growth and profit margin exceeds 40%, makes Zscaler a top-tier software-as-a-service play. With a total addressable market expanding as more workloads move to the cloud, the runway for sustained double-digit growth remains long. Zscaler isn't just for small businesses. It is the infrastructure of choice for the Fortune 500. Over 40% of the Fortune 500 and over 30% of the Global 2000 rely on Zscaler to secure their digital transformations. These aren't just single product sales. These are deep, multi-year strategic partnerships. The company's land and expand strategy is highly effective. A customer might start with Zscaler Internet Access, ZIA, for web security, then add Zscaler Private Access, ZPA, to replace their VPNs, and later adopt Zscaler Digital Experience, ZDX, for monitoring. This multi-pillar adoption increases switching costs and solidifies Zscaler's presence in the enterprise. For investors, the concentration of high-value blue-chip clients provides a level of stability and predictability in recurring revenue that is rare in the volatile tech sector. Innovation is the engine that keeps Zscaler ahead of the curve. the company has moved beyond simple access control into the realms of AI-powered threat hunting and digital experience monitoring. With the recent launch of Zscaler Business Insights and advancements in AI-driven data protection, they are leveraging the massive data set they process, trillions of signals, to predict and prevent attacks before they manifest. Furthermore, Zscaler Digital Experience, ZDX, allows IT teams to pinpoint performance bottlenecks, whether it's a local Wi-Fi issue, an ISP failure, or a cloud app slowdown. This expansion into observability turns Zscaler from a security cost center into a productivity enabler. For a business decision maker, this means fewer help desk tickets and a better performing remote workforce, directly impacting the bottom line. The financial case for Zscaler often rests on the total cost of ownership. Traditional security models require purchasing, shipping, installing, and maintaining physical firewalls and VPN concentrators at every branch office. As companies grow, this hardware sprawl becomes a nightmare of capital expenditure and technical debt. Zscaler replaces this mess with a single cloud entry point. By decoupling security from the physical network, organizations can slash their MPLS costs, expensive private data lines, and use standard internet connections without compromising safety. Case studies have shown that large enterprises can save millions in hardware and operational costs within the first few years of deployment. This move from CapEx to a predictable OpEx model is a major selling point for CFOs looking to streamline balance sheets while enhancing the organization's security posture. Zscaler does not operate in a vacuum. Its value is amplified through deep integrations with other industry leaders. Strategic partnerships with Microsoft, Amazon Web Services, and CrowdStrike create a formidable best-of-breed security stack. For example, Zscaler works seamlessly with Microsoft 365 to optimize traffic, ensuring that security checks don't slow down essential tools like Teams or Outlook. Its integration with CrowdStrike allows for an automated response. If CrowdStrike detects a virus on a laptop, Zscaler can instantly block that device from accessing any corporate applications. For the decision maker, this ecosystem approach means they aren't locked into a single vendor for everything, but can instead build a coordinated, automated defense system that shares intelligence in real time across the entire IT environment. No investment analysis is complete without considering the risks. Zscaler operates in a fiercely competitive environment. While they are a leader, giants like Palo Alto Networks and Fortinet are aggressively building their own cloud security suites. Furthermore, as a high-growth tech stock, Zscaler's valuation can be sensitive to interest rate changes and shifts in market sentiment. Its price-to-sales (PS) ratio is often higher than the industry average, reflecting the high growth expectations baked into the stock price. Any slowdown in billings or a major security breach on their own platform could lead to significant volatility. Investors must weigh these valuation premiums against the company's high retention and massive market opportunity. For the long-term holder, the question is whether Zscaler can maintain its innovation lead as the big fish in the networking world attempt to move into their cloud-native territory. As we look ahead, Zscaler is positioned at the intersection of three massive trends: cloud migration, the rise of AI, and the increasing frequency of cyber attacks. The transition to a zero-trust architecture is no longer an if for global enterprises, it's a win. Zscaler's ability to move beyond securing users to apps and into workload to workload and OT security for factories opens up entirely new revenue streams. The company's vision of a world without firewalls is becoming a reality, and their first-mover advantage in the cloud has created a data moat that is difficult to replicate. For business professionals and investors, Zscaler represents more than just a security company. It is a fundamental piece of the modern enterprise infrastructure. As cyber threats become more sophisticated, the demand for a scalable, intelligent, and cloud-native defense will only continue to grow.